welcome to today's morning report. Charles Proses on Friday the 30th of September with me, Richard Perry, market analyst at Handtech Markets. It is Friday the 30th, which is the last trading day of the month and also the quarter. And we are having a very big down day on equity markets. Sentiment has been absolutely smashed overnight. You've seen the big trigger being Deutsche Bank. Deutsche Bank continues to come under pressure ever since the US has put a regulatory fine of $14 billion on it, and subsequently Deutsche Bank has been sold down sharply, and the banking sector around Europe has come under significant pressure now, always coming under increasing pressure, with hedge funds selling out of Deutsche Bank and concerns over one of Europe's largest banks, and there is a real sort of fear of contagion that's running through these markets, and as to what this could mean, and subsequently we're seeing a big flight to safe haven assets. Now, what we are seeing is the dollar strengthening. The yen is the main outperformer of the day, but the dollar is stronger as well. And we're seeing across the board safe haven trades doing well. So you're seeing yields falling away, 2-year treasuries falling away, 10-year treasury as well, dropping, and also gold as well. So all that is having an impact on markets as the risk sentiment sort of takes a flight for the hills. And the oil price, which has had 2 very strong days of gains, breaking this sort of downtrend, I suppose you'd say, from the June high, but there's been a bit of an element of profit taking now, so it's about sort of 1.5% down on the crude oil price. It'll be interesting to see how this one plays out in terms of coming back into support. There's a good support around 46.50 on WTI, so maybe that'll be a level at which markets start to look for buys again, but certainly this near-term move is looking increasingly corrective. So generally speaking, we are looking pretty risk off today. We've seen a bit of a jump in the VIX as well overnight, and that's continued today. That's up from those low levels around 12 to back over 14, so quite a significant jump overnight in that. So it's certainly the bit of fear in the markets trading today. So what have we got to look forward to today? Well, actually quite a lot of data out today. We start off with the UK data, GDP and current account, which are out at 9:30 this morning. Sorry, wrong. Where's that gone? Okay. Anyway, so today, here we go. So here we see previous. Sorry, I've just been a bit all over the place on that one. So right, okay. So your data today is UK data. GDP at 9:30, expected to come in line at 0.6%. That was the second reading of GDP and expected to be confirmed by the final reading today. And also the interesting one will be the current account deficit, meant to improve slightly to £30.5 billion from 32.6. But as you can see, that's still a pretty negative number. So the markets are still going to be looking upon that. You've got the UK current account deficit, which is around about sort of 6-7% of GDP at the moment, which is not all that great, I think you can say. Then you look at the Eurozone inflation data. Flash inflation for September expected to improve to 0.4%, which would be the same level as it was back in January this year. So that would be a positive number. Certainly would be positive if it came at 0.5%, so Mario Draghi would be happy with that. Then into the afternoon you've got the US inflation. Core PCE expected to improve slightly to 1.7%, and that's at 1:30. And then Michigan sentiment expected. This was the flash data, or the preliminary data, 89.8, expected to be revised slightly higher to about 90.1, something like that. So that's all that is this afternoon. But obviously at the moment markets are focusing significantly on this Deutsche Bank issue and how that's going to play out. But my chart of the day is the dollar Swissy. Now dollar Swissy, if I zoom out, has been in this you could argue it's been in this downtrend channel, but you would also argue recently in the last 6 months or so it's basically been trading sideways between 94.75 99.50, but within that you are seeing a sequence of lower highs now, and it's putting pressure back on this sort of pivot line around 96.50. 96.50 has been supported throughout September, got broken intraday yesterday but didn't close below, so I think the pressure is on, and the sequence of lower highs would suggest that little rallies are a chance to sell. So you've got that resistance that's been coming in at 97.35 this week, and today's rally on the dollar strength on the back of this Deutsche Bank or these Deutsche Bank fears, I think will be given a selling opportunity. Now you look at these the RSI, which is just down slightly from 42, but certainly is below the levels that we've seen throughout September. So the RSI is pointing to a breakdown. The stochastics are also pointing to a breakdown, and the MACD lines are falling. So I think that little rally is a chance to sell. This is the hourly chart where you can see that we've just unwound back into basically a band of resistance. I said on the morning report 96.90 area, and where have we seen the high today? 96.92. So that's certainly is a sort of move that I think is going to be seen as a selling opportunity. You've got a sort of band of resistance 96.90 to 96 sort of 97.20 area. Obviously that resistance at 97.35 is a key rally high, but I think this is now looking at the hourly chart as well. On the momentum indicators, the RSI went towards 30, having previously been supportive around sort of 35.40. MACD lines also more corrective, although it's just unwinding slightly. I think these are all sort of near-term unwinding moves that I think will ultimately now be sort of sold into on a rally into resistance, and I think it's going to give you a chance to sort of put pressure more back on the 96.50 level, which if it were broken, I think would obviously open initially at 96.30 you'd say, but to be honest I think you would reopen these lows 95.30 area from August. So I wish you good luck in your trading today on dollar Swissy, and I'll speak to you later.